Market trades flat, digesting Monday's big move. IT stocks and RIL see profit taking, but Nifty holds around 22,100 mark thanks to buying in the blue chip banks.
RBI looks to tighten deposit-taking norms for housing finance companies, bringing them at par with NBFCs. Proposes that HFCs maintain 15% of public deposits in liquid assets versus 13% at present. Ceiling for deposits held by HFCs proposed to be reduced to 1.5 times net owned funds versus 3 times currently.
Acquisitions will be a part of the strategy as we look to grow our key businesses 5x over the next 5 to 7 years. M&M MD Anish Shah says in Davos, and also M&M is seeing high interest from existing investors for partnerships across the group's businesses.
Expect the RBI to guide banks with respect to maintaining an appropriate credit deposit ratio, says Axis Bank MD Amitabh Chaudhary. Speaking at CNBC-TV18's Davos meet, he adds that the new prudential norms are likely to temper credit growth.
Nalco gains as it looks to explore lithium mining via a joint venture that also includes Hindustan Copper, MECL, and also an Argentinian company. Paytm gains as UBS initiates a buy call on the stock with a price target of 900 rupees per share. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Poddar. With me, as always, is Pavitra Parekh. And Pavitra, there is some bit of weakness that is creeping into the market at lunch hour. But still, Nifty 50, you have to give it to it. It is just about holding on to the 22,000 mark just by the teeth. So at the moment, it's in the negative zone, 0.2% down on Nifty 50. It has lost 50 points. And there you can see in the last few minutes of trade, it has really weakened further. What's holding up is the bank Nifty, and some of the blue chip banks are doing well, better than the others and holding on. So therefore, bank Nifty is flattish, but with a negative bias now. And mid caps, that is losing maximum with 0.5%. Loss that we are seeing on the mid-cap universe. So all in all, it is some of the counters like BPCL, Titan, Big Boy, Asian Paints. From the auto pack, there is Hero MotoCorp, Maruti, which are really holding up fabulously in the green. But advanced decline ratio, if you really look at it, it is in favor of the decline. So that is because of the broader market participation being on the downward side. IT is not having a good day of trade today. Pavitra.
Yeah, I guess IT is just giving back after 2 solid sessions. I mean, for the market overall, right? Yesterday, we had a 200-point run-up on the Nifty. So I guess a little bit of a pullback coming through there. But like Nisha was pointing out, a bulk of the fall that we've seen has really come through on the broader market. So the Nifty mid-cap index is down 480 points from the highs of the day. You have the small-cap index, which has seen a similar near 1% kind of fall as well. Only 660 stocks advancing for around 1,600, which are in the red right now. So that is why you have so much of a skewed advanced decline ratio coming through. I do want to point out that, you know, there are some pockets like some of the PSU banks which are doing relatively better because you started getting few of the numbers in. So Bank of Maharashtra, for example, that one is holding up. You have BOI, which is holding up. So those ones seeing a little bit better. Bank of Maharashtra, by the way, seen a big fall. Now it was up around 4% the last time I checked. So that's come off quite heavily. The other space which is doing relatively better are some of the larger banks, right? So these are the ones on your screen. ICICI, Axis, HDFC Bank, we're expecting results today. So ahead of that, very flat trade on all of those. The metals pack also is doing a lot better than the rest today. So names like Nalco, of course, there's news on these, but these stocks are holding up. On the downside, like Nisha pointed out, IT, but I'd also add real estate to that mix. All of these giving back some of the gains that we have seen. So that is the shape of the market. We'll come back to this, but let's kickstart the show by bringing you some of the top voices from the World Economic Forum's Davos Summit. 2023 turned out to be better than feared, while 2024 looks tumultuous. That's the word coming in from noted Professor Kenneth Rogoff. Speaking to Shireen, he also says that he is cautiously optimistic on India growth. Listen in.
2023 was better than I think most of us imagined. I wasn't one of those saying there'll absolutely be a recession, but it's surprising to have interest rates go up that much and not have that happen. So all you can say about 2024 is it probably is not going to be as good as 2023. The odds of a recession in a normal year are 1 in 7. I think they're higher now, so in the 25 to 30% range for the United States, and maybe for Europe higher than that because they have a whole host of other problems. But it could be worse.
Let's talk about India and the outlook for India. I mean, here the mood continues to be fairly bullish as far as India is concerned. What's your take?
Well, I mean, I think part of the reason the mood's bullish on India is it's so negative on China. I agree with that. I mean, I think when we spoke last year, I talked about that. And so India is sort of looking good by comparison, and the rate of growth is very good. But I mean, India still has a long ways to catch up, and it's doing, I think, some things really well. Like it's finally gotten it together on building infrastructure and catching up on that, which is low-hanging fruit in development. I mean, there's no reason for India not to have world-class infrastructure in order to be able to build out its economy. On the other hand, you still have, some of the issues with way too much protectionism. At least according to people who study it, a lot of monopolies really in India, over-concentration of power. But, clearly India is very well represented at Davos here. The mood's bullish. I would be cautiously optimistic.
All right, let's talk about more words or the corporate voices coming in from the World Economic Forum. And artificial intelligence and technology are the two buzzwords in the World Economic Forum underway at Davos. And also the top business leaders discuss embracing artificial intelligence and technology in their existing businesses and the ecosystem. Now, our managing editor, Shireen Bhan, in fact, spoke to DRL's GV Prasad and Axis Bank's Amitabh Chaudhary on AI, tech, as well as business. Listen in.
What will be the big trends that could shape the pharma industry in 2024? Everyone's talking about generative AI and the fact that it could be a potential game changer as far as the healthcare industry is concerned, bring down the drug development and drug discovery time significantly. How are you reading that?
So it's early days, but I'm spending a lot of time, including here, to understand where this is going. AI is certainly a force multiplier. It is, I would call it, it amplifies human capability. So we are seeing some benefits already in our own organization in terms of use cases, not in drug discovery or innovation yet, but in process development, in R&D productivity, in manufacturing productivity. There is some impact, but I think the best is yet to come. The potential looks great, but companies like us have to learn this little at a deeper level. From a digitalization front, we are in a very good place. We have invested in digitalization over more than a decade and connected all our value chain activities digitally. Now we have all that data. We are now investing in creating machine learning algorithms, AI-driven models, and of course looking at generative AI, but that is at a very early stage.
The buzzword here, of course, is AI, and of course, cybersecurity is a key concern for banks back home as well, including yours. On both those counts, what is the priority? What is going to be the strategy from here on, specifically for 2024?
So, as a well-known professor has said that Gen AI, everyone will look at Gen AI. The people who will benefit from Gen AI are the people who are creating the platform for Gen AI and the consultants who will allow you to, help you in using that platform. Because all of us are investing in Gen AI and looking at it very, very actively. All of us will get the benefit, but as all of us get the same benefit, customer, might gain from it, but in the sense, will it improve our balance sheet and our profitability? I doubt it. We have been looking at Gen AI for the last 12 months or so. We have actually launched a first Gen AI platform internally. It is not cheap, it is quite expensive. And it is for
How much money are we talking about?
It is decent sum of money because, it does not come cheap. And the way you get charged for it It's, a simple question could mean you being charged for it multiple times. So, but our view is that no, we have to embrace it because it is a technology which is going to change the world. We have launched it for employees internally where they can ask questions of our platform of any product, service, process, etc. And right now the accuracy rates which are getting are pretty good. So we launched in about 100 branches. We are working on 8 or 9 other proof of concepts for GenAI, and I'm sure other banks and other institutions are doing the same. So it is going to be a game changer. My only view is depends on the pace at which you embrace it. If you do it at a very fast pace, and yeah, you will make some mistakes along the way, I think you'll get much bigger benefits. If you're just a follower, I don't think the benefits will be substantial because that will become almost essential for you to do business. You asked me about, what are we doing on some of the other stuff which is happening in the marketplace. Well, as a large institution, you have to spend on technology and expanding your franchise on a continuing basis. There is absolutely no option whatsoever.
All right, that is an important voice coming in from Davos. But just take a look at the Nugent Software stock. The results just came through a short while ago. It is up almost 5% right now. Anyway, it was going into its results very strong, right? Because the entire IT pack moved up. So in 1 month, it's up around 24%. And if you take a longer sort of look at it, last year at this point, so 1 whole year ago, it was at 200 rupees. The stock is at 890 right now. That's the move that we're seeing on Nugent Software. We'll get into a short break now. But as we do that, remember the union budget is less than 15 days away. So what is your wish list from the Finance Minister? We present to you the CNBC-TV18 budget ballot box coming to a hotspot near you. We will be placing these ballot boxes at popular public spots like malls, colleges, theatres and others across major cities. We will also ask the newsmakers who drop into our studios for their budget wish list. So come join us and tell us what is your top budget wish for the Finance Minister. Drop your wish list at a CNBC-TV18 budget ballot box near you. We will compile these and present them to the Finance Minister before she presents the union budget. Welcome back. You're still tuned into Business Lunch. Let's talk about some earnings now. Federal Bank is trading low. It's down around 3% right now. So Abhishek is here to take us through the Q3 numbers. Abhishek, take us through the highlights.
It's a mixed set of numbers coming in from Federal Bank, especially on the weaker side. Now, the net interest income is largely in line with our poll. Other income is up 61.5% YOY and about 18% sequentially. Remember that they sold stake in FedFina or Fed Bank Financial in Q3, so there is a one-off income over there. OPEX is elevated, growing at 5.9% quarter-on-quarter. In that, the employee expense is up 10.7% on a sequential basis. So PAT has come in at 1,007 crore versus our poll of 919 crore due to one-offs that are there in the P&L. Key ratios, net interest margin has declined a bit, 3 basis points down quarter-on-quarter to 3.19% versus 3.22%. Return ratios remain elevated, one of the best that you are seeing in last 8 to 9 years. ROA at 34, quarter high of 1.4%. ROE is strong at 14.8%. However, the risk weight asset to advances, either RBI's ruling has impacted or not, that needs to be clarified from the management. RWA to advances is at 21 quarter high of 90.9% when compared to 87.8% in the previous quarter. In terms of asset quality, slippages were expected to be on the higher side as per analyst estimate, and it has come in on higher side close to about 500 crore when compared to 373 crore in the previous quarter. Asset quality was expected to be improved on a sequential basis but saw increase or deterioration on a sequential basis. So in absolute value wise, gross NPA and net NPA ratio have increased more than 4% quarter on quarter, and for the first time in last 14 quarters, gross NPA ratio has actually increased to 2.29% versus 2.26%. So first time you are seeing deterioration in asset quality of Federal Bank in last 14 quarters. Back to you.
All right. Thanks so much, Abhishek, for getting us all those details. And we'll also get chatting with the management at 1:35 p.m. today to discuss the numbers. Do stay tuned in for that. But a quick look at the market and keep an eye on that. A sharp fall and market has weakened further in the last 15 minutes of trade. So about from 50 points loss, now it's 80 points loss on Nifty 50, and it is just about holding on to the 22,000 levels. And the bigger fall is really coming in from the mid-cap universe. A very sharp fall from about 0.5% cut. It is now almost racing towards a 1% cut at the moment. So yes, there is weakness creeping into the market in the last 15 minutes of trade or so. And on my screens, the biggest losers from Nifty 50 in terms of percentage coming in as big boy ONGC, Tata Motors, Hero Motocorp, Adani Ports, Adani Enterprises, Bajaj Auto. So keep an eye out on the market. We'll take a quick break on Business Lunch. We'll return with more news and developments of the day. And also remember that the current situation at the Delhi airport as several flights get delayed owing to bad weather. We'll get you more details on that. Stay tuned. Welcome back. You're watching Business Lunch, and let's talk about the situation in the national capital, which affects all of us. Well, the dense fog continues to play spoilsport, resulting in the multiple flight cancellations as of this morning. However, the situation at the airport is better than what it was yesterday. In fact, our colleague Danish is standing by with all the latest information on what's happening. Danish, tell us.
Well, for a third day in a row, dense fog engulfed the national capital, and in the early hours of the morning, the visibility at the Delhi airport dropped to as low as zero, and for a brief period, only Cat 3 landings were taking place. But however, after the weather cleared, the takeoffs and landings were normal. But in the early hours, we also saw that around 70 flights were impacted, and certain flights towards nearby cities like Jodhpur, Jaipur, they were cancelled because those airports are not Cat 3 compliant. Hence, those flights couldn't take off from the Delhi airport. Moreover, yesterday the DGCA has also issued SOPs to the airlines which they have to follow, in which they have to inform the passengers well in advance about the cancellation. And moreover, the DGCA has also told the airlines to ensure that in case if any flight is supposed to delay beyond 3 hours, then they have full right of cancelling that flight, and they have to inform the passengers well in advance. So all in all, if we see whatever situation that we saw on Sunday, the havoc that we saw on Sunday, that situation is not there today, and things are improving.
Okay, that's good to hear that things are improving at the airport there. But Danish, stay on, because there's been another incident where passengers deboarded from an Indigo aircraft were eating meals on the tarmac. The DGCA has now issued a show cause notice to the Mumbai airport and to Indigo Airlines for violation of aircraft security rules. Just tell us more about this as well.
Well, that's correct. The Ministry of Civil Aviation has issued a show cause notice to both Mumbai Airport as well as Indigo for a viral video which we saw in which passengers were having their dinner on the tarmac. So basically, both of them, both the entities have, not given the full rights for passengers deserve. And according to this show cause notice, Indigo has been told to answer that why they did not follow the proper procedure of screening the passengers, because that was a diverted flight that was diverted to Mumbai, and in that we saw that passengers sitting outside. Hence, those passengers were supposed to be screened first before embarking on another aircraft. Moreover, neither did the Mumbai airport nor did Indigo inform BCAS regarding this. So there is a clear violation of certain aircraft rules. That is why the show cause notice has been issued to Mumbai airport as well as to Indigo. And by midnight today, both of these entities have to send a reply to the government, and if they fail to do so, then we can expect certain penalties, especially financial penalties, being imposed on the Mumbai airport as well as on Indigo.
All right, Danish, thanks so much for getting us those important details coming in for all of us. And keep an eye out on that. We'll keep coming back to you with that. It's completely out of time on this edition of Business Lunch, but Midcap Radar will take all the action forward. Stay tuned for that. Thank you.